I want to tell you about the specific day I had not too long ago. I woke up, I did my preparation, I marked my levels the night before, I had a clear plan. One trade, one setup, one direction. I was patient, I waited for exactly what I was looking for, and when the moment came, I executed perfectly. Proper entry, proper position sizing, stop loss where it was supposed to be, risk managed, everything by the book. And the trade stopped me out. It just stopped me out. The market came down, tapped my stop, and then went exactly where I thought it was going to go. I was right about the direction, I was right about that specific level, and I still lost money. And here's why I'm making this video, because nobody in this space wants to talk about that. Everyone wants to show you the wins, everyone wants to show you the payouts, the screenshots, the green days. I get it, that stuff performs well on YouTube. But if you've been trading for any amount of time, you know what I just said, you know what I just described, right? That happens to everyone, even to people who have been doing this for years, even to funded traders. So today I want to walk you through that day, what happened, what I was thinking, and what it actually means. Because I think understanding this one thing separates traders who last from traders who quit. Now let me paint the picture for you. The night before, I spent time doing my analysis. I looked at the higher time frame structure. I identified a clear area of interest, a zone where price had previously shown a strong reaction. I marked it, I wrote down my plan. I knew what I needed to see before I would even consider entering the trade. I wasn't going to force anything, I was going to wait. That morning I sat down, reviewed the plan, and I told myself, one setup, one trade. If it doesn't come, then I will not trade. Simple. And then the market started moving, and it started moving exactly the way I had mapped it. It swept a liquidity level I had marked. It came right into my zone, and I saw the confirmation I was waiting for on the lower time frames. The structure shift, the candle close, everything aligned perfectly. And I entered the trade. Position size was correct, I wasn't overexposed, my stop loss was placed below the level that would invalidate my idea. If price came back and took that stop, it would mean I was wrong. And I was perfectly okay with that. That's the deal you make every single time you enter a trade. For about 10-15 minutes the trade was moving. Not aggressively, but it was moving, and then it just paused. It came back, it retraced, and it kept retracing, and before I knew it, it had taken my stop loss. And then it started moving. It literally went. About 30 minutes later, price moved almost exactly where my target has been. Full move, absolutely clean move. I was right about everything except the timing that was slightly off and my stop that wasn't wide enough to cover the retracement. Now here's the part I want to be really honest about, because this is where most traders make it worse. In the moment that trade got stopped out, there was a voice in my head. You know the voice. It said, just get back into the trade. You know where it's going. The analysis was right, just re-enter. And that voice is dangerous. That voice has cost traders far more than the initial stop loss ever did, because what that voice is doing is asking you to abandon your process in response to an emotional event. A loss triggers something in us, especially when we feel like we were right, and the brain starts looking for a way to recover it immediately. I've been in this game long enough to know what happens next if you listen to that voice. You re-enter without a proper setup. Your position size creeps up because you're trying to make back the loss. Your stop gets moved or removed completely because you're short this time. And then one bad trade becomes a very bad day. And a bad day quickly becomes a blown account. I've seen it happen. I've watched traders, good traders, go from a small discipline loss to a complete account wipeout just inside a few hours because they chased that one trading idea. So what did I actually do? Well, I closed the charts, I opened my trade journal, I logged the entry, the exit, the reasoning for the trade, the result, and my emotional state at each stage. And then I walked away. Not because I'm some kind of, machine without emotions. Not because I don't care about losing. I absolutely care. Every loss matters. But I've learned that the market will always be there tomorrow. The setup that just played out will come back around. It will happen again. My edge doesn't disappear because of one trade. This is something that takes time to actually understand. You can hear it 100 times. You can know it right inside your mind, but until you've lived through enough bad days to understand that consistency is the only path forward, it doesn't fully click. Now, I want to break down what a day like this actually teaches you, because there are several things worth understanding here. The first one is this: the outcome of one single trade tells you almost nothing about the quality of your trading. Listen to that again, right? The outcome of a single trade tells you almost nothing about the quality of your decision making. Think about it like this. Imagine you're playing poker, right? You have the best hand statistically. You play it correctly. Your enemy gets lucky on the river and wins. Did you make a bad decision? No, you made the right decision. The outcome doesn't change that. Trading works the same exact way. You can follow your process perfectly and still end up losing. You can break your rules and still win. In the short term, the market doesn't reward good decision making. It rewards luck sometimes. But over a large enough sample of trades, your edge shows up. Your process shows up. This is why professional traders don't evaluate individual trades. They evaluate their process over time. Did I follow my rules? Was my risk consistent? Did I take setups that matched my criteria? If yes, even if the trade lost, that's a good trading day. The second thing that they reminded me is that your stop loss placement matters more than people think. I'm not saying my stop was wrong. It was placed based on logic, based on where my idea would be invalidated. But there's always a conversation to be had about whether you're giving your trades enough room to breathe without expanding your risk. And that's a balance. And it's something that every trader has to figure out through experience, through backtest, through understanding the specific instrument they trade. And the third thing, and this one is maybe the most important, days like this are how you find out what kind of trader you really are. Anyone can manage a winning trade. The money comes in, it feels good, you close it, great. But losing trades, especially the ones that really sting, the ones where you feel like you were robbed by the market, those are the ones that reveal your actual psychology. Can you take the loss and walk away? Can you come back the next day with the same mindset? Can you keep following the process even when the process produced a painful result? That's the job. That's literally what the job we're trying to do is. Now, let me tell you what the average trader does on a day like this, because I've seen the pattern too many times. They get stopped out, they feel the sting, and immediately they start looking for someone to blame. The prop firm, the broker, the spread, the market makers. It was stop hunting. They targeted my level. Maybe sometimes spreads are wider than they should be. Sometimes execution isn't perfect, but more often than not, it was just a trade that didn't work. That's it. That's the whole story. Then they try to re-enter, often in the same direction, sometimes in the opposite direction, just out of frustration. They do that without a proper setup, without proper sizing, and now they're trading emotion. And the market doesn't care about that. The market doesn't care if you're having a bad day. It doesn't adjust for your feelings. It just keeps moving. And then at the end of that day, they're sitting on a loss that's 2, 3, even 4 times bigger than the original stop loss. And now they have a real problem, not just financially, but psychologically, because now they have to come back tomorrow carrying all of that baggage. This is the cycle that kills trading accounts. Not one bad setup, not even one bad day. It's the response to the bad day that destroys people. The traders who survive, and I'm not talking about surviving one bad month, I'm talking about building something sustainable over years, they've all figured out how to treat a loss as data rather than a disaster. They review it, they learn from it if there is something to learn, and they move on completely. Move on and come back the next day ready to trade the same process again. I'm not perfect at this, I still feel the frustration, but the gap between feeling it and acting on it, that's what you're developing as a trader. You're not trying to stop feeling things, you're building the ability to not let those feelings make your decisions. So, if you're watching this and you've had that day, and I know a lot of you have, I just want to say, it doesn't mean your analysis is wrong. It doesn't mean your strategy doesn't work. It doesn't mean you should quit this. What it means is that you just had a losing trade, and that's part of this. That will always be a part of this journey. The question is what you're gonna do next. Not what you do in the next 5 minutes, but what you do over the next week, the next month. Do you stay consistent? Do you trust the process even when it hurts? Do you keep your risk in check? Do you come back tomorrow and do the same exact preparation, the same exact execution with the same discipline? Because if you do, congratulations, that's what a real trading career looks like. Not a highlight reel, not every day is a win, but a consistent, disciplined approach that compounds over time. And that's what I'm still building. That's what most of the traders I respect are still building. And if you're serious about this, that's what you should be focused on too. Now, just one more thing before I let you go. If you're at a stage where you're serious about getting funded and you want to work through this stuff properly, not just the fundamental technical side, but the whole picture, the mindset, the process, how to approach prop firms, I do have a mentorship program called the Prop Firm Blueprint. It's not for everyone, it's for people who are actually committed and want a structured path to getting funded as fast as possible and also trading with discipline. If that sounds like something that might be for you, there's a link in the description where you can go and apply. I always let the program speak for itself, the same as the results that our students have had over the years. And if you're looking for a prop firm to start or continue your trading journey with, I've been recommending Hola Prime recently. Link is in the description as well, worth checking out if you're looking for a prop firm. Alright, that's it for me in this video guys, I'll see you in the next one.